Hey, welcome back. Are you ready to move but concerned because your mortgage isn't up for renewal and you don't want to pay penalties to break it? I'm Justin Chaussee, your friend in the mortgage business, and this is a question that is misunderstood by a lot of clients and even sometimes realtors. But before we get into it, make sure that you press the subscribe button, smash the notification bell so that you can continue to get real estate tips. So what is porting a mortgage and why should you care? Well, you're a homeowner who's thinking about moving to a new home. Porting your mortgage can save you thousands of dollars in penalties and interest, but there's a catch. Not all mortgages are the same. Your mortgage needs to be portable to begin with. Let's break it down. Porting a mortgage means transferring your existing mortgage from your current home to your new one. This allows you to keep the current interest rate on your mortgage balance and the same loan term without having to pay any prepayment penalties. Before we discuss the difference between a straight port and a port with a blended rate and increase, let's talk about checking if your mortgage is portable. It is super important because not all mortgages are portable. They're not all the same. So make sure to check with your mortgage broker and see if your mortgage has this feature. More importantly, that is why you want to work with a professional. We know that mortgages typically are broken before the end of the term or people make a move. So working with a mortgage broker can help make sure that we handle these questions and that you have a mortgage that is suitable and has the flexibility to meet your family's needs if you want to move or do something with your mortgage before the end of the term. To check if your mortgage is portable, simply look at your mortgage agreement. It should clearly state whether it is portable or not. If you're not sure, don't hesitate to give me a call. I will be happy to help you out with this. Now let's get into the two main types of porting: the straight port and the port with a blend and rate increase. A straight port is when you move your mortgage from one property to another without changing the mortgage amount or interest rate. This is perfect if you are downsizing or moving to a property that is priced the same. On the other hand, a port with a blended rate increase is also known as a port and increase. It is when you need to borrow additional funds because your new home is more expensive than your current one. In this case, your lender will blend your current mortgage rate with the current market rates of the additional funds you need. Let's look at an example to make it clear. So let's imagine you have a $300,000 mortgage at a 3% interest rate and you want to buy a home and have a $600,000 mortgage. With a port and increase, you'd keep your original mortgage rate for the first $300,000 and get the current market rates, say 5.5%, for the extra $300,000. Your lender on the back end would do a calculation and blend these rates together to increase the new interest rate for the entire mortgage. And that's the difference between a straight port and a port with a blend and increase rate. Just remember, it is crucial to check if your mortgage is portable in the first place and set it up that way right from the start. If you have any questions, feel free to drop them in the comments section. I'd be happy to help and I'll answer them immediately. If you're looking to buy and need help porting your mortgage, give me a call. Shoot me a text or go to meetjustin.ca and book a direct call in my calendar with me, and I promise me and my team of preferred partners will give you the local competitive advantage in today's real estate market. We'll see you again.